Good afternoon, ladies and gentlemen. Welcome, one and all, back to the charts on Monday, the 4th of November, marking the day before the end of the fight between Harris and Trump. Hello there, team. Good afternoon. Hey, Matthew. Hey, James. 5 hours into... Good man. Bloody hell. 5 hours of sessions you're catching up on. Good lad. Well done. Hey, Ian. Good afternoon, buddy. Good to see you. And good afternoon, everyone else. So, great to see you guys. How were your weekends? All had a good weekend? Good couple of days off, hopefully? Obviously, a huge week this week in the markets. Not necessarily that we'll see in terms of market impact, but very, very significant changes in the political landscape on the horizon. We also have, of course, the FOMC this week at some stage. Fireworks spectacular. Nearly blew myself up with the rockets. Oh, no. Yeah, I've got to be honest. Lucy actually pulled some old fireworks that we've had in the garage for years. I mean, it's got to be... I don't know if they were bought in the last... I can't remember if they were bought last fireworks or the year before that. And we've had them in the garage for ages. And she was like, yeah, shall we use these? And I was like, I'm not entirely sure. I didn't know how safe they'd be. So we decided to sway away from that idea. Have to be fair though, there wasn't actually that much going on up here in terms of people setting them off or anything. I mean, the fireworks night, it felt like the Sunday actually had more than the Saturday, so it's pretty quiet around here for the fireworks. I know we went to a show a couple of years back, or maybe even 3 years back now. Brain's foggy, in St Albans, I believe. And that, I think it was St. Albans anyway. I can't remember exactly, but it was really good. Really, really good show. But yeah, we decided not to do it this year. We'd had an incredibly busy day before leading up to it. And just decided to give it a pass. Hey, good afternoon, Nadia. Good to see you. And good afternoon, Scotty D as well. Good to see you, buddy. Yeah, Scotty, I was just catching up on your message about catching a sickness bug this weekend. Sorry to hear that. That doesn't sound great. We took the boys to this thing in London on Thursday, into town on Thursday for Halloween. And there was a guy on the way home on the train when we were getting the train back home. And I tell you, he was coughing and sneezing on my back the entire way. Because I was sat sort of into the middle of the train, talking with the kids and Lucy and that, and it was every single three minutes go by, it was a big cough and sneeze. I felt the back of my neck get it. It was horrible. So yeah, I'm kind of waiting at the moment to see if I catch it. Right, let's get cracking on then. See what's occurring in the markets this week. So first and foremost, guys, the big elephant in the room: Kamala v. Harris. Kamala v. Harris. Trump v. Harris. I'm just don't mind what I'm saying. I'm still down on coffees for the day. Trump v. Harris. The battle ends tomorrow, or so we think anyway. I mean, obviously the end of the race will end tomorrow, but we are yet to find out possibly if it's going to be tomorrow. It might, as I mentioned, it might be a little bit delayed when whoever wins. Now, some things to remember. It is very important to remember that even though the election ends tomorrow, we may not get the result for up to a week after. Sometimes, it could even be a couple of weeks after at some points. So, obviously, we're planning to find out who wins tomorrow. But if many of the swing states, which at the moment they are really neck and neck, it's down to sort of a marginal error in counting, they will have to be recounted. And therefore, we'll have days delay, or it could be anything. Anything could happen. It could be a few hours delay. It could be a day. It could be 2 days. It could be 3 weeks. So we really we shouldn't be sort of placing any bets on the fact that we're going to hear it tomorrow. We just need to plan ahead of time for that. But rest of the fundamentals this week, it's actually not that quiet either. We have the RBA interest rate decision overnight on the Tuesday evening. Obviously, 5 a.m. UK time is the presidential election, but I've just covered that. Obviously, that might be delayed. It might not be. We'll just have to wait and see. I will be getting up extra early for the presidential election, though, and probably going back to bed if no winner is announced immediately. We, of course, on the Thursday have our federal interest rate decision, which is the big one for the US. We're looking at a 0.25% decline in their rates. We have the BOE earlier in the day at 12 o'clock midday as well. Obviously, the Fed press conference at 7:30 on the Thursday evening, which might be a good one to cover with you guys. I know it's a little bit tricky timing with many people, especially for you guys in Australia. It's a bit of a pain in the rear end. But that being said, I still might stream it live. I'll let you know. But it might be nice to hop on, maybe do a little bit of a live trading event or something on the Thursday evening. So I'll keep you posted about that one. Friday, we've got the unemployment rate for Canada as well, which is a relatively big one, with the other 2-star events as well for Canada coming out. So unemployment rate, average hourly earnings, the Canadian version, and so on and so forth. So stuff going on this week, guys. It's a really, really busy fundamental week. We've got lots of good stuff going on. I didn't even cover the BOT for Canada or the ISM services data for the US as well. We've got the balance of trade for Australia. Obviously, it's well out of our trading time zone, but still very important, and will be good to see what that one sort of suggests in the early hours of Thursday morning, 6-7 o'clock when we wake up and we get to our charts. So very, very nice busy week with lots of fundamental catalysts driving our trading volume. So if we go along, have a little look at where we're sitting at the moment, then looking at the day change so far, our top losers are the USD yen, the USD Swiss. So we're seeing a real risk switch over here, and the Japanese yen's powering up a little bit. We've got pound, which is lost as well. If we look at all we need to do really is look at the second currency, right? So we've got yen, Swiss, yen, in the top spots here for the big movers for the day. You can see this as well if I just click the top here. We can see yen, Swiss, NZD actually of all things, but the US dollar will be coming down for that one. Swiss here, Japanese yen. So a lot of those, risk currencies really starting to power up here, getting the week off to the start. And it doesn't come as a surprise because you have to think everybody is going to be extremely cautious. Trading today, to be fair, should be taken at extremely high levels of caution. All the professionals will be. A lot of funds will be remaining flat. They will be risk adjusting. They would have been risk adjusting the previous 2 weeks leading up to this point. Obviously, small fries like us, we don't really have to worry about that too much. But things like investment funds, even weighted ETFs that a lot of people will have, specific portions of and stuff like that will all be readjusted for this week. And that's entirely down to, of course, the US presidential election. In terms of intraday trading, listen, today and tomorrow, I'm going to do a complete, what would you call it? Like a blanket ban. I'm going to avoid the Forex market entirely for today and tomorrow. Not because I'm expecting any sort of random wild volatility swings, but more so because it's good practice. The presidential election creates a situation in the markets that is, relatively speaking, unprecedented in terms of normal market dynamics. This is my 5th presidential election now since the beginning of my career in the markets, and I've seen a whole number of things happen across the 5 the 4 so far that I've been through. Some of them have been incredibly volatile and very rocky. Others have been like there's nothing happening whatsoever. It's been very, very flat. But the same thing rings true throughout the entire ordeal, and that is that really random things can happen at any particular time, and you will be caught out from it. and it's often not very good. So I would be very much on the side of high levels of caution. US stock market trading today is what it's going to be all about. Even down to the commodities, gold is going to be a complete and utter miss for me. Okay, so when we go over to things like this, I'm going to be happy trading my stock basket and intraday trading this as normal. FX positions are going to be completely wiped out for the next 48 hours. And I would be most certainly avoiding gold at all costs. Gold is going to be, I would argue, more of a high level of caution than bloody Euro USD, to be honest. Now, I wrote a big piece this morning. Well, I say it's big, take that with a pinch of salt. I wrote the piece this morning for you guys regarding the presidential election and some of the things that you should be watching out for as relative, moderate intermediate traders and new traders as well. And you should be watching out for things like gold prices because of the fact that gold is such a safe haven at the moment. So we're thinking probably going to get a rally, and that makes fundamental sense, logical sense to see a rally in gold prices into the election. But there is also the other consensus as well that if we do get a Republican office in the US again, we're going to see a strengthening United States dollar as a result of that. And I'm being very crass here. I do appreciate that. It's not always so black and white, but I'm just using historic evidence to support what I'm saying right now. So historically, we will see dollar rise. We will see stocks rise in a Republican environment. Generally speaking, the dollars will take a bit of a dip in a Democratic political environment in the US. Same as the stocks. Probably, we're always going to see growth in the stock market, but not as much in a democratic environment there. For the obvious reasons as well. I mean, if you're not really into politics at all in how they move markets, then that's absolutely fine. I'm just speaking garbage to you. But if you do take a bit of an interest in it, that is the way it usually will go. With gold, at the moment, gold is at a precipice event. I mean, we are currently ranging at 27.40, which if we look on the weekly time frame here, look at the weekly chart. It's ridiculous. It's like even more bullish than something like the NAS 100. I mean, frankly, if we look at the NAS 100 has not actually been that bullish, to be honest. I mean, it's been quite range bound throughout a significant portion of the year. But the gold is really leading the charge at the moment, and it really goes to show where investor sentiment is. And it is a really good image of the US dollar as well, because if we look at the weekly of the US dollar at the moment, that's the same peak, right? So we have actually seen the US dollar just continue to form lower lows. I wouldn't say consistently forming it's been consistently forming lower highs. It has not been consistently forming lower lows. We haven't really seen too much lower lows being formed. So it's a very, very broad falling wedge pattern that we've been seeing here. Very, very broad. Whereas on the flip side of that, of course, and I revert back to our gold commodity, it's just been absolutely nuts. So because of where we're trading in the moment, we could very well see a whopping sell-off in gold once the election actually comes into play. Safe haven money has been flowing through the doors thick and fast in gold all the way up here as time has gone on, increasing its exponential rate to the election. Now we are on the election point, which is up at this area at the moment. Once the election happens, we could very well see big sell-offs back down to one of these given levels of liquidity, maybe here at around 26.63, possibly lower at 25.30, or I don't personally believe we will reach this one, but this one is the biggest point of liquidity we've had in this run to the upside, and that's down at 24.60. Now, if you think about it, guys, this is a fair few months. What was this? So we broke free of that at the end of July, August, September, October, and now into November. So we're talking about a fair whack of time to get up there. To believe that after the election we're going to see like one big swoop down in a couple of weeks' time, it's very, very unlikely. But I think one of these two levels could definitely be achieved. However, let's say I believe that's probably going to happen in the likelihood of a of a Trump election. That's what I would think. I think Trump is going to be pretty bearish for gold. So if we think about why that would be, it's because Trump is incredibly unpredictable. Now, it's kind of, how would I say, it's like counterintuitive, right? I've said one thing, which is Republican parties usually generate buying interest in the US dollar. But actually, I'm saying if Trump gets in, the gold's going to sell off, which is conflicting, right? It's contrarian view. But the reason I'm saying that is because of how unpredictable he is. He is a wild card. And because of how much, I mean, the stuff that he's been doing at the rallies, the racism, the endless sexism, and the really crazy, wacky, and weird other stuff that he's been coming out with, authoritarianism and stuff like that, really quite bad, colourful stuff. I would think that that's going to be really destabilizing for the US economy, really destabilizing for investor sentiment as a whole, and therefore actually I'll tell you what, just replaying it all in my head now, I'm thinking actually that's going to be incredibly bullish, isn't it? I think gold, I mean, that's probably just as bullish as it could get for gold. So, yeah, no, maybe my view's not contrarian whatsoever, actually. Maybe my view is just purely bullish gold. And I don't think gold's going to have a significant sell-off with Kamala Harris either. So actually, it's not contrarian at all. It is just singular. In essence, gold is bullish. Period. Okay, well that's all right. That makes life a bit easier. So yeah, I'm just going to be bullish gold, guys. That's all I'm going to say on it. Bullish gold, but I'm not going to be buying it for the next 48 hours. That's for sure. So, let me take a breath there for a moment. It's a lot of words in a very short space of time. Let's have a flick over to UK Brent. So, actually, I'll tell you what. I know I haven't done this for a long time, but I am going to bring in crude as well to the mix. Where have you gone? Where has it gone? Oh, there we go. Yeah, right. Up. There we go. Okay. Alright, so yeah, we're going to have a look at crude rates as well. So US crude at the moment, currently trading down here at the lows. It looks actually incredibly like the US dollar, doesn't it? I mean, yeah, I mean, that's no coincidence, right? I mean, it's right on par. Look at that. Yeah, there. I mean, that's a huge similarity there at the moment. I mean, this is fantastic. Actually, there was a disparity between the two asset prices here, and then from around this point on, it's just been perfectly matched the entire time. So, yeah, apart from actually, surprisingly, right now, these last couple of weeks have been a bit off kilter. Okay, so, yeah, at the moment, US crude trading down at these lows, probably looking at the run back, I would say, to this area in here. Very, very similar to the US dollar. No real surprise, I suppose. So this would be the level of trading margin that I'd be working with on US crude at the moment. Again, I won't be necessarily looking to trade this until after the election. Trump, I hate saying that name. It's not Trump. It's a Republican Party will be more bullish for oil than Democratic. So therefore, if Trump wins, oil long. If Kamala wins, oil short. Oil is incredibly connected, obviously, to the rest of its fundamentals in the energy sector. I already wrote a little bit about the energy sector as well. Not necessarily all doom and gloom for Kamala in the energy sector, but the thing about Kamala is she's pro renewables, and so therefore you're probably still going to get a bit of a sell off in something like a fossil fuel like this because it's not within her supported sectors. It's not something that she actively promotes. Whereas Trump is, burn burn the hell out of it all. So yeah, I think that's going to be pretty safe to guess which way those are going to go based on whoever wins tomorrow. Let's have a quick look at the stock heat map then. So it's at the moment, I think heat is certainly the correct term that we would use for looking at this. This is representative, folks, of the S&P, so America's 500 large, and it's in a really bad state of affairs still. Very, very bearish. Electronics, finance, I think it's pretty safe to say tech as well. Google's obviously rallying at the moment, but the majority are break even or loss. Retail trade, look, we're gonna get our outliers. Okay, Amazon's up 5.37%. Okay, we'll look at everything else. Okay, so we're looking at sector areas here, not specifics. It's all looking pretty bad. The only one out of them all that I would think is doing quite well is distribution services, and that's down here. Consumer services, okay, it's doing all right, but to get the week off, we are very much bear market territory across the S&P. If we go down and check out the UK FTSE, have a look at what's going on over here. The UK FTSE at the moment is a bit of a mixed bag. I would say that energy, minerals, consumer non-durables are doing okay, quite balanced. We've got finance, which is in a bit of a sorry state of affairs. Health tech down, non-energy minerals, consumer services, utilities, communications. It's all looking pretty bearish at the moment. It's all looking pretty rough. So we'll have to wait and see, obviously, how this pans out. There's going to be a lot of companies in the UK FTSE which are going to be significantly affected by the presidential election as well. Okay, so there's going to be a lot going on with equities. A lot. And so therefore, if there's a lot going on with equities, there's going to be a shed load going on with our US stock markets that we know and love and trade every day. So we're going to have to be thinking about that as well. Like the US 30 Dow Jones, for example, is probably going to be a bit of a mixed bag. I would think that US tech stocks, the NAS 100, would do well in either environment, whereas the S&P 500 will probably look at being extremely cautious and being held back under the Harris party. So it's a really difficult one because we don't just have any other Republican leader going for president. Okay, that's why this is really difficult. It's arguably, and has been touted already, not by myself, but by others out there, it's arguably one of the most important presidential elections of modern times because of the fact of who is running. And I'm not going to say why. I'm not going to get into the politics side of it because I don't like it. But I think, or I hope anyway, everyone will immediately know why it's a big one. It's a really, really big one. So we're going to have to wait to see what happens here. This is all caution. Okay, this is all caution. All the reds that we see in our sectors here, this is all cautionary stance. There's reallocation of assets, fund risk adjustments are happening, things are being removed and replaced and reallocated all over the market at the moment. And this is the chaos that we can see. Okay, so there is, even though it looks chaotic, there is patterns here. There is order, actually, in the chaos. So it's important to remember that. This isn't just, just a flower blanket bear market territory. This is because of what's happening behind the scenes. So, yeah, all on tomorrow. All eyes on tomorrow. So is there any questions at all, guys? Any questions? Yeah, gold to the moon, whatever happens. Yeah, man. Yeah, cut a long story short, that is exactly what I feel. Yeah. Yeah, I think it's smart. I think that's smart. I mean, obviously I'm going to be here every day and providing the market insights. So and it's going to, and there will be actionable trading content. You know, there always is with me. But as I said, I think the wise choice is to monitor. If there's some absolutely, golden egg type of affair going on, then obviously we'll have a stab, won't we? But generally speaking, it's going to be really light on the gas this week, and definitely a monitoring stage. I don't suppose you were linking up with TradingView. My subs ended and I'm not paying full whack for it. Linking up with TradingView? What, on a professional thing? I already did that. Yeah, it doesn't do anything for the members though. It doesn't do anything for you guys, so I stopped it. Yeah, there was literally no point. It's not very good. I mean, it's not favorable for. It's not favorable at all. It's just basically use this link and go to TradingView and pay full whack. So yeah, it's quite useless, to be honest. But I mean by no means pay full whack. I don't know when the next there'll be a Christmas sale, won't there? But the monthly fee for I don't even know what it is. Standard is like, I don't know, $18 or something, 18 quid or something. So I don't know. It's not. I don't feel it's that bad for what you get. And you don't need professional. You don't use any indicators. There's no need for indicators. There's no need for loads of multi charts or anything. And so you only pay what you need it for, right? Black Friday's at the end of this month. If Black Friday's at the end of this month, then that's what you want to wait for, because TradingView do some incredible Black Friday deals. And also, don't forget that you can, if you buy an annual sub, they stack. So if you buy one, it doesn't mean you can't buy 2 or 3 or 4. You could get 10 years worth of Black Friday annual sales if you want, and it just stacks on the account. So then you wouldn't need to think about paying for it again for a few years or something. There you go. Pro tip of the day. Okay, let's have a look at these US markets then. So the NAS 100. So the NAS 100, I'm going to try and ignore what's happening left of the chart there. Yeah, it's a big rally that's happening at the moment, actually. So we've got a beautiful little break of structure that's just happened, unfortunately. We've got the highs and the move there. So I'm going to ignore everything that's left of that line, okay? So fresh price. We've got this area in here, this area in here. These are the trading margins for the day. We have a median in there as well at around 21.05. I won't be using that as the low to go to. Yeah, no, I won't be using that as the low to go to for sure. I would much prefer to use this low here and consider that a fake out at this stage. It'll be interesting to see what pans out this afternoon. But the short is ultimately going to be... Right, okay, so what we're going to be doing today then, shorts from the highs, longs from the lows, same method as we always do. We're not going to be looking as much as we usually would though. So what I'm going to do here is I'm actually going to utilize the median today more as a TP and break a structure area than I would other times, and just say let's go short from here or long from there. What I'm actually going to be doing today is looking for longs and shorts in here and here and breaking this margin down very, very tightly. So then if we go to the 1 minute chart, for example, let's go down to the 1 minute, check things out. This essentially would be the break of structure, or in this case, the break close retest and break a structure point for the trade long. And I would be looking to do the same from here, break close retest long, or actually break a structure, beg your pardon, it's a break a structure in the middle. It would be a rejection from the highs for a break a structure short, and this is the trading margins that we're working with. So I'm not going to put tons and tons of different trading panels on here to visually show exactly what I'm looking at. You guys should know. If you don't, that's absolutely fine. Just let me know if you're a bit confused about a certain area. That's not a problem at all. Always ask questions. Don't just assume. So we've got the short, we've got the long, okay, and we also have the long here and the short there as well, utilizing both of these spaces as today's trading areas. I'm not interested in anything above here. I'm not interested in anything below here. Okay, so I'm completely avoiding trading this area entirely. My trading today in the NAS 100 will all take place between A and B. So, US 30 Dow Jones, 15, anchor chart. Let's do our top down. So, we've got, I mean, that is an ascending level that we cannot ignore there, unfortunately. Well, not necessarily unfortunately for the shorts, but that's all right. So yeah, I'm just going to have that in there, just like so. So that's the ascending level. We're going to have to wait to clear out for a short back down to the previous low, which then makes this today's trading margin for the shorts. And for the long, yeah, it's definitely got to be in there, doesn't it? Right, sat there, which is then going to be the top of that area. Now that works out quite nicely as well, because then once we get out of there, we've then got the TP above, which is our long target, which is a bit wider than the others, but necessary. So that's our trading margins for today's US 30 Dow chart. We have a breaker structure in the middle for the long. Okay, so that's going to be BOS, entry, target profit, and our stop loss, which at this stage on a 1 minute chart is going to be, you know, smaller than we assume. So 1 minute time frame, we're looking at this area specifically as our point of entry. That doesn't need to be anywhere near as wide. So then that makes that stop loss pretty decent. So I mean, this is not bad. I'm going to put that down a little bit more. 1 to 2.6 is absolutely fine for me for a Monday, and I'll be really happy if we manage to get that one off. And then of course we have the big one down below, which is the sort of major inflection point. As we can see here, price rally, price run, hits this area, big bounce, right? So this is the major point in here, which is where we have that institutional orders entering the market. So then if we break the structure of this area in here, let's try and narrow this down. Let's try and fine tune this so we're not left any ambiguity. So I would say this in here is what we're really looking for. So I'm going to say that looking at this is definitely an area worth respecting. Maybe not necessarily in recent history, but on Friday's afternoon session, we had the rebound retest to confirm that liquidity point. We also then had a double retest of it here and here. So for me, this does require a little bit of respect. So what I'll be then looking for is essentially the breakout retest of that area, and then to jump aboard for the fresh run back down to 41.92. So that makes this area in the middle as our designated no man's land for today's trading. So we've got margin below, we've got margin above, we've got split bias in this asset, so we're not going to be left without a potential trading opportunity here. It's just about timing as always. So just to recap, we have no major fundamental catalysts taking place today. It is a clean, clear day. It is, however, the Monday before the presidential election. Caution is going to be the main point to the markets, especially over the next 48 hours. With that in mind, I still think we're going to have the capacity to be able to trade these markets today. I do think also it's a Monday. Mondays are always historically temperamental. To get the week off, to get the week off with a bang, it doesn't often happen. So there are a couple of things to contend with, but this is the plan today. This is what we'll stick to, and we'll see how it goes. For the next 2 days, streaming will be normal. I'm going to be around and very, very active and looking to chat with people in the room if you've got the time and stuff like that. The presidential election obviously is listed as 5 a.m. call out for tomorrow morning, but we also don't actually know if that's going to be the case or not, or if there's going to be delays and so on and so forth with actually getting the correct call out from the US on that. It could be, as I said, days, weeks later. We just don't know. We'll see how things go, obviously, and I will be here actively going through the motions with you. So if there's no other questions, guys, anyone got any further questions or anything? Or are you clear on this afternoon and what we're looking at? All good. Won't be trading myself anyway. He's not well still, but that... Yeah, no problem at all, Scotty. That's absolutely understandable, mate. Yep, no problem. Okay, guys. Well, I'll wrap things up there then. I wish you all a wonderful day today. Good luck there out there this afternoon. And I look forward very much to catching you tomorrow. So I'll see you then. Cheers, guys. Bye-bye.